Good evening, ladies and gentlemen, wherever you are. If it is morning, good morning. If it is afternoon, good afternoon. And welcome to the Sustainability Finance Series brought to you by Makerere Initiative, an organization that is based in Kampala, Uganda.
Kwetuli.
And this evening, we are privileged to have two very distinguished guests that are going to be sharing with us a lot about their experience in sustainability finance. My name is Martin Bakundana. I am a finance specialist. I work with Makerere University in the Department of Accounting and Finance at the School of Business, College of Business and Management Sciences. And this is the third of the many series that we are bringing to you. I invite you to join in the conversation through the comments, the comment section, where you'll be able to post your comments, your questions, and engage with us in the show. Sustainability finance is an area that has gained traction over the last many years for very obvious reasons. We, as a population, have a responsibility of taking care of nature. In return, nature will take care of us. What we have seen happening over the last couple of years is that we have not done exactly that. Meaning, therefore, that nature has had to fight back. And in fighting back, we've had to, unfortunately, endure the negative consequences. And therefore, as we engage in the conversation this evening, we ask ourselves, what is sustainable investment for nature? And what is the role of technology in closing this nature finance gap? With me this evening, two very distinguished lady and gentleman who will be dissecting this topic for us. First up is Marianne, and Marianne will, in a short while, give us her very elaborate profile, and she will tell us exactly what she has been doing in the world of sustainability finance. Alongside her is Professor Dmitry, who is a visiting professor at Makerere University, where I work, at the same college actually. It's a pleasure, Prof, to be on this platform with you. And I am hoping that we are going to have a very wonderful conversation. And so I will start with you, Marianne. Kindly unmute and introduce yourself to our audience, telling us briefly what your experiences have been in sustainability finance.
Thank you so much, Martin. And thank you so much for the invitation to join this panel together with Prof. Dmitry. It's a great honor. So I actually have a natural science background. So I come much more from the climate change science and biodiversity, so the living world. But I started out my first job actually on the African continent, working with climate adaptation, and that through the lens or the instrument of microfinance. So that sort of put me on this path of trying to bring the two worlds together. But that was, and that will sort of reveal my age, but that was before there were any sort of regulation around finance needing to think about green risks and green opportunities. So at that time, it was only driven by the needs of these markets actually to be able to finance different types of solutions for adaptation. and then came mitigation. So that sort of put me on the road, and that was a very immature time of that conversation. But what I found was that if you were in the microfinance space on the African continent, I was in West Africa, where people were faced with climate change every day, they needed to build their resilience strategies and they needed to finance their resilience strategies. So it was very real. And in that sense, I think that conversation is more mature in some ways on the African continent, at least where people are living this. Then I went much more into sort of back to Europe and much more into finance, and I more mainstream because it became a theme in Europe also because of regulation. And I became the executive director of the Green Digital Finance Alliance. So we were co-founded, a not-for-profit foundation incorporated in Switzerland. We were co-founded by Ant Financial in China and the UN Environment Program. And at that particular time, you had a lot of fintech innovation going on, which was around disrupting the financial system, trying to make it more efficient. And then you had all the green innovation on the other side, but the two were not working hand in hand. So we saw a big opportunity to bringing those two streams together. So we became a knowledge partner to the UN Task Force for Digital Financing of the SDGs. So we delivered a number of country reports and country roadmaps on how countries could work with their financial sector to really enable them to use digital innovation for green. And with that time, we worked mainly with green digital finance for climate. And I became more and more interested in also bringing the nature conversation and nature space into that. And I became invited into the technical expert group of the Task Force for the Nature-Related Financial Disclosures, setting up the terms of reference for that, where I'm spending a lot of my time now also in the Secretariat in an expert support function, where we just launched our framework on the 18th of September in New York at the New York Stock Exchange, which is a framework with 14 disclosure recommendations, which is sort of the sister initiative of the Task Force for Climate-Related Financial Disclosures. So we are really hoping that the financial sector will take this into business practice to be able to understand nature-related finance or the nature-related impacts, dependencies, risks, and opportunities. And I'm also the director of nature-related finance at Global Canopy, where I work in the digital space mainly with a digital open access platform, which is called Anchor, which is actually a platform that enables free of access any financial service institution to go in and put in the sectors of your portfolio. And what you will get out is that you will get your main exposures to your nature-related impacts and dependencies. It's a tool that's been leveraged by 6 central banks to date that have actually done a nature-related macroeconomic financial risk analysis of their financial system. So very happy to talk more about that tool and how also some of your audience here would be able to engage in it. As I said, it's completely open access and free to use, but very happy to be here. Thank you so much for the invitation.
Thank you. Thank you so much, Marianne, for that elaborate. And I am hoping that we are going to explore more about your role at Financial Canopy and then more into that conversation. But quickly moving on to Professor Dmitry. Prof, kindly introduce yourself in the next maybe 3 minutes, telling us your work over the last couple of years and how your work then contributes to sustainability finance. Prof? Prof, are you there?
Yes, I am. Good morning or good afternoon, wherever you are. And thank you so much, Martin, for already partially introducing me. We belong to the same educational institution, and I'm a visiting professor at the College of Business and Management Sciences at Makerere University. Until very recently, I worked for the United Nations Capital Development Fund. my background is in development economics, corporate finance and investment. And I believe that with Marianne, we will cover the two sides of the finance for nature or nature-based solutions finance, both from the microfinance side of finance and the larger corporate finance. And we should have in mind that corporates can be represented both by private and public bodies. So whenever we are talking about corporate finance, we should also have in mind that public aspect of it, not only the private aspect of it. In the UN Capital Development Fund, UNCDF, where I worked for many years, we were actively engaged in designing and structuring various financial solutions for a broad range of investors, as I said, both in the public and private sector, in various areas, including, of course, green finance to a large extent. And we have experimented with a number of various financial products and a number of financial vehicles to test and scale up those solutions that we have developed in different countries, not least in Uganda, where UNCDF has one of its biggest programs globally. So I'm very happy to join this conversation today and speak about these kind of solutions.
Fantastic, fantastic. And I can confirm that the audience is already engaging. So there are already questions in the chat, but I will get to those later on. So coming back to you, Marianne, we are discussing technology and how technology is providing solutions in this sustainability finance, especially for financial institutions. So my first question to you is, could you tell us in what ways these financial institutions can collaborate with technology providers to develop innovative solutions for closing this nature finance gap?
Yes, very happy to. And it's early days for nature finance solutions out there. It's not something that is very road tested. So we're at the start of the innovation curve. So if we just look to what can we learn from the climate space and what has been going on in terms of green digital finance and what has really been something that the financial service institutions have adopted that we can then transport into the nature space. And I think one thing which is super interesting and relevant also for the African continent is the fact that the big headache for most banks in Europe, and I think also in many other jurisdictions, is really the SMEs. Because of the fact that the transaction cost, asking an SME to do a carbon inventory, that's a very bureaucratic and very complicated exercise. And why will you do that when you're an SME that's just worried about cash flow and trying to pay the next bills, right? So there we are seeing that, at least in Europe, open banking infrastructure is being leveraged by APIs, is being leveraged by the banks, and using AI to automatically classify to sectors the different expenditures of SMEs, and then using emission factor databases for that jurisdiction to assign an automated carbon footprint to an SME, so that it becomes either something that's offered by the bank, if your SME has a current account in there, that you can then maximize the accounting by including carbon footprint per expenditure, and thereby you can issue green-linked loans that are then dependent on how much the SME then reduces carbon footprint. If you're in a jurisdiction where there's no open banking infrastructure, of course, that is a bit more complicated. But what we've seen in jurisdictions like China, for instance, which is highly digitized, and where you have some large digital banks like MyBank or others, where they have used natural language processing capabilities of AI to automatically read utility bills of the SMEs to be able to ascribe automatically energy intensity scores, etc. So how can we leverage some of this in the nature-related space? Now, what we have issued with the Task Force for Nature-Related Financial Disclosures is a framework with a set of metrics on how to measure not your carbon footprint, but your nature footprint. So it's a bit more complicated, but you could essentially try to adapt some of these solutions to do the same thing, because we know what are the main impacts of different sectors, and we can assign at least ratings in terms of high impact sector, low impact sector, and help SMEs through AI looking through their expenditures or current accounts to at least find the hotspots. And that's sort of one of the, because the smaller assets are of course the most challenging one. Then of course the challenge with nature also compared to climate, where climate we have big assets for transition, so we have big wind farms, etc., or we have rollout of off-grid where you already have IoT that can automatically track the kilowatt hours produced in a village or in a community, and you can report that back, and then you can link that to a financing solution. Nature doesn't really act in that way. Often nature are really smaller assets. It will be a small-scale farmer, for instance, changing his agricultural practices, or it will be a smaller forested or woodlands, etc., which is much more complicated in terms of trying to fit that into a financial model, because that always needs bigger assets in order to structure the finance on top of this. So some of where I see some of the bigger and interesting potentials is really to leverage distributed ledger technology together with IoT to be able to issue smaller bonds, etc., that are digitized for financing of these nature-related assets. And there, a number of digital technologies can really be used for the MRV, so the monitoring and verification. There's a lot of open source satellite photos that you can use to automatically train AI to track changes in canopy cover. So you can link a digital bond to the carbon sequestered by increasing in canopy cover on land, for instance. But that is a more sort of cutting edge approach, which requires that the regulatory environment is available for you to leverage DLT and these types of technologies. But what we are seeing some use cases on are these biodiversity linked farmer credits. Rabobank, they issued the first one, I think, in 2021. It's not a super high-tech instrument. I mean, they are using some digital data layers, but mainly the way it's set up is that farmers, they sign up to a set of changed practices, which will improve the soil quality on the land of that farmer. So they will reduce the nitrogen use, the phosphorus use, the pesticide use on that land, and then they will be rewarded by an interest rate rebate. And that is an instrument that is super, super interesting because of the fact that sort of the long-term play with that is relevant for Africa as well, because it does build up the soil carbon. So it makes the asset more valuable, and it makes that soil carbon tradable, hopefully, at some point for the farmer. So it's actually, there's a positive incentive built into it. So that's some of the landscape, but I'll stop here.
Yeah, thank you. Thank you so much, Marianne. And it's interesting that you mentioned the role of AI in providing some of these solutions, but also in providing more complexity as far as addressing these challenges is concerned. And I want to quickly bring in Professor here, just directly supplementing on what Marianne has said. What do you think is the symbiotic relationship between sustainable finance and technology? And how can this relationship help these financial institutions in addressing this nature finance gap?
Thank you so much, Martin. And I have listened with great interest to what Marianne has said about the digital solutions, including, as you said, AI, which can be used to facilitate the flows of nature-based solutions-directed capital. and finance. I will mention some of those solutions, particularly in the context of Uganda, where UNCDF, as I said, has one of its biggest programs globally. But I will probably focus more on financial technologies. We should not forget that technology in itself, of course, is a very catchy word, but it's also a very big word in the sense that it covers a lot of ground, and it can incorporate various types of technologies. And certainly, digital technologies, important as they are, do not exhaust entirely the range of possible technologies that can be applied for sustainable finance in the area of nature finance. The biggest issue in the financial, from the financial sector point of view, is the information asymmetry between the lenders, financial institutions, or other types of investors, and the borrowers. And this is a particularly acute problem in the context of developing countries such as Uganda. And Marianne mentioned it in the context of small and medium enterprises. And this is another reflection of the dimension of the information asymmetry, because the smaller is the size of the entity, of the enterprise, the less are the capabilities of that agency, of that entity, to be able to collect and provide information that would satisfy the informational needs of the potential lender. So it is important from that point of view to improve the capacity of the potential borrowers, but also the capacities of the potential lenders to be able to understand the nature of the borrower itself, but also the nature of the project. To what extent it may contribute to green finance or nature-based finance, or however we call this type of finance that is directed towards preservation of natural assets. One of the digital solutions that UNCDF has put in place is digitization of due diligence and project appraisal procedures in financial institutions. It has been done in many countries. In Uganda specifically, it was done for the Uganda Development Bank. And digitization, which incorporates the relevant data and helps the appraisal officers to have a holistic view, firstly, improves the credibility of credit decisions, and secondly, reduces the time required for this decision, which is very important, of course. Digital solutions can also be applied to understand the impact of the future projects and to calibrate the projects to an extent where they're made convincing to the potential lenders and facilitate those credit decisions. For example, when UNCDF was preparing for the launch of the local climate adaptive living facility in Uganda, and this is a 10 million euros facility, which is now operational, and it covers 8 districts in Uganda. It conducted a climate change vulnerability assessment at the district level. And unlike climate change vulnerability assessments that are done based on the review of the existing data, review of the existing literature, in this case, it was done based on the analysis of satellite imagery. And this allowed that granular approach and focus on the districts. Otherwise, without this, it simply wouldn't have been possible, because data at that level simply does not exist. It does not exist even in more developed countries, let alone in Uganda. Such solutions that contribute to, for example, digital traceability, helping to digitize supply chains and trace the movement of the produce from the farm gate to the final consumer, or digital lending that connects consumers to the availability of credit based on their digital footprint. These are examples of digital solutions that can be used to promote and facilitate nature-based finance. But as I said, let me focus on financial technology solutions, and I'm quite happy that here in the comment section, I see a request to speak exactly about this, and in particular, in what ways advancements in financial technology have reshaped the landscape for nature-based investments. I can't really say that there has been a revolution in that respect, but there have been some positive changes. We have seen over the past decade or so multiplication of different financial products. I can mention performance-based climate resilience grants, which UNCDF uses in the framework of local climate adaptive living facility for public corporates. There are interest-free loans and the project guarantees, which are used for the START facility in Uganda. START is a blended finance facility. START stands for support to agricultural revitalization and transformation, and it serves small and medium enterprises, exactly the segment that is quite problematic, as we have heard from Marianne. It is various grant schemes, such as the one that is used for the Agritech Challenge, in particular targeting startups and including digital solutions to support agricultural production, such as produce tracing, which I have mentioned, market information systems, farmer loyalty programs, e-commerce marketplace for certified agricultural inputs, agricultural extension advice, which strengthen the potential borrowers, because this is a critical issue when it comes to nature-based finance. And coming from the field of corporate finance, I can tell you that strange as it sounds to many people, the amount of finance out there significantly exceeds the amount of the qualifying demand. There is simply more finance. There is a lot of finance that cannot be applied. And it cannot be applied not because of the lack of the number of the borrowers, but because of the lack of the qualified borrowers. And so those financial solutions that I have mentioned help reduce that gap between the lenders and the borrowers and make the borrowers more qualified. And of course, there are different financing mechanisms and vehicles. I have already mentioned the START facility, which entered the second phase of its operation. There are experiments with bond vehicles, by the way, subnational green bond vehicles, which is very interesting for public corporates. And I can mention the Tanga green bond, which is about to be floated in the Dar es Salaam Stock Exchange very soon. There are global facilities like the one that was launched very recently at COP28, jointly by ICLEI and UNCDF. It is called the City Bridge Facility, and it involves a project preparation facility plus an investment facility that is supporting secondary cities, specifically to implement green projects and projects that promote nature-based solutions. So this is a very short overview of the digital and particularly financial solutions that can ensure better sustainability of finance for nature.
Thank you so much, Prof. And thank you for giving us, examples from your time at UNCDF which really help in contextualizing this and localizing it, especially for our Ugandan audience. There is also a question in the audience which you touched on from Diane Ayebazigwe about ways in which advancement in financial technology has shaped the landscape in nature-based investment. And I wanted Marianne, if she has one or two comments about it, to respond to it. If you have anything to respond to that specific question, Marianne, you could do that.
Yeah, advances in financial technology. Yeah, for nature-based solutions. Yeah, I think exactly what the professor said. The financial technologies that takes out some of the transaction cost for bond issuances. So digital ledger technology, smart contracts are super relevant, and the BIS Innovation Network, their Green Finance Working Group, they have trialed a number of prototypes out of the Hong Kong office on green tokenized bonds. The last trial they did were that they linked in carbon credits so that the investor could get a stronger return. So they had forward-looking carbon credits that were built into the the smart contracts. So I think this is super relevant in terms of DLT has for a long time been of interest, of course, to financial capital markets, but it's been mainly an efficiency play. It's been mainly a conversation around how can we take out some of the inefficiency in the bond issuances by having one shared ledger instead of multiple and having to reconcile data across data silos. But I think where the real game changer is exactly when we start to apply this to green assets, whether it's nature or whether it's climate-based assets, because of the fact that you have that additional data layer that you need to report on the use of proceeds. And that makes green bonds inherently more bureaucratic than sort of vanilla bonds. And I think all the technologies we've talked about now, and we have seen some of the first green bond issuances, especially coming out of BIS, with very automated use of proceed reporting using IoT, AI, etc. I think this is for the African continent a super, super interesting space, but also it's been moving slowly because of a lack of regulatory clarity, and also the fact that we don't have central bank issued digital currencies in most markets that also to somewhat extent sort of does make it a bit less directly implementable in some jurisdictions at the moment. But I think that is a super interesting area.
Yeah, it's good you mentioned CBDCs because CBDCs in Africa especially are still a very strange word. But I hope that at least I think only Nigeria has moved forward into implementing some of that. The rest are really, really still in infancy. So moving on from there and moving on to the next question. I'm sure you know that the Task Force on Nature-Related Financial Disclosures have issued recommendations, and I guess on how technology can be used to overcome some of these nature finance gaps. So I wanted you to speak to this. What are some of the challenges that you think these financial institutions do face in adopting and implementing some of these TNFD recommendations?
Yeah, I think I just want to go back to the professor's comment around lack of transparency, and that is one of the biggest challenges. And we have 14 recommendations in the disclosure framework and 14 core metrics. And these metrics, I mean, unlike carbon, where it doesn't matter whether you are financing the emission of 1 ton of carbon in India or in Uganda or in France, it doesn't matter against the global carbon budget that we need to stay under 1.5 degrees, it's the same that you're counting against, right? But whether you finance the destruction of forest in Finland, Uganda, or Brazil will have massively different impacts on nature and biodiversity, right? So location data is super, super important for a financial service institution to not only stay at a very, very high level in terms of their portfolios, real impacts on nature on the ground, nature negative impacts. So one of the biggest challenge is, of course, that for the TNFD, financial service institutions do need to go to also their financed impacts over time, and really getting that transparency, especially in those sectors which are most material to nature loss. So agriculture, mining, infrastructure, that's one of the biggest challenges. And that's where we see a lot of the market responding and a lot of technology innovators responding to this need. So there are more and more databases building up. S&P Global, they have a full database of location of mines around the world. Oxford Spatial Finance, they have a number of open source databases on asset geolocation on a number of assets. But agriculture remains the most challenging one, definitely, because it's long supply chains, it's opaque supply chains, there's very little transparency. So technology is being used by a number of the financial service institutions and corporates, where mainly if you use that, for instance, what Nestle is doing, one of the large food companies, then what they do is that they leverage satellite technology from, especially they focus on those commodities, and that's what also the financial service institutions do that have the highest risk of embodied nature loss. So that's a palm oil, soy, etc. And then they get the global mill list, and they know they have databases of the mills they're sourcing from in Indonesia, other places, and then they geotag those mills, and they leverage satellite data, and they get instant red flags on their dashboard when there's a deforestation event. They contact the mill, they figure out, is that from some of their suppliers, etc. And that's, of course, super sophisticated. And if you're financial service institutions and you have a portfolio of multiple of these companies, then it's super, super challenging. So I think definitely that's where we see the markets most responding, but also where it's super challenging currently for the financial industry to really be able to disclose that data.
Yeah, thank you. Thank you so much, Marianne. And there is actually a question in the chat which was asking you to speak about this exactly. It is from Sauda number. It's how do digital platforms enhance transparency and accountability in sustainable finance initiatives? If you could just speak directly to that question, Marianne.
Yeah, I mean, there are a number of ways. There are a number of ways that this can happen. I mean, there are a number of sort of open source platforms where you can go in and sort of the IBAT tool, for instance, which is an open source platform, which it has a paid for layer further down, but you can start to play with it. It's called IBAT, and there you can go in and put the geolocation. If you're into project finance, for instance, you can put the geolocation of the project you are financing, and you will automatically get a list of which are the red listed species that are in that area that you need to be aware of, and where you design your project to mitigate that you will further accelerate the extinction risk of these. And you also get proximity reports automatically generated, so you can get the proximity of your finance project to protected or sensitive areas. So that is one way, because that is open. So even if you are as a citizen or as a bank client or as a pension policy holder, you want to go in and check it, but then you need the asset geolocation of those investments, which is only, I mean, it's for project finance, or if you're a bank that's closer to the clients that can actually demand that data. But that's just one option.
Thank you. Thank you so much, Marianne. Now, moving back to Professor here. I wanted you to speak about the role of government, the role of the finance sector in general, the role of academia. I mean, working with Makerere University, and of course, the role of other international organizations like the UNICEF that you worked for a long time. How do they, all these institutions, how do they collaborate to create an enabling environment for sustainability finance?
Thank you so much. It is it is clear, there are two things that are very clear. One is the dimension of the problem. And the second one is the positive externalities that financing for nature assets has. To give you an idea about the dimension of the challenge that we are facing, I'm looking now at the latest UN Environmental Program report on finance for nature, which says that the amount of industries or the cost of industries that produce directly negative effects on nature is 25 times bigger than the entire amount that goes into nature-based solutions. So we have about 200 million globally, 200 million USD going for nature-based solutions. And we have about 5 trillion that generates that negative impact on nature in terms of the production. So this is indeed a huge issue. And I believe that the biggest underlying problem in there is lack of awareness and lack of knowledge on the part of the private sector, because the private sector is the biggest producer of negative consequences on nature assets. And if that business, anything that has positive externalities, and we know well about it, does not come very easily into the thinking of private business, because it does not concern them. The benefits go to the society at large. They don't go to the business itself. So why would they care? But not only that, very often they simply don't know what can be done or how things can be done to improve their, say, carbon footprint or to reduce the consumption of nature assets, or to make it more sustainable in the process of their production. If things are going well or relatively well, why would they give it an additional thought? It involves transaction costs.
Yeah.
So we need to involve the public sector more, exactly because of the positive public externalities that these activities would have. We need to involve them more, to involve the public sector more, including academia, including the government, including also non-government institutions. First of all, on educating the private sector, because the biggest potential for changing the situation is with the private sector. The private sector is the biggest producer of products and services that are having that negative impact on nature. And it is imperative, and I would say even critical, that their understanding of what can be done and how can be done is improved. And they are also assisted. It's not always the money that is the issue. It's often access to the relevant expertise. It is peer-to-peer learning and exchange. It is exposure to some new ideas that would incentivize private sector entities and that would make them more responsive to this challenge. You may know, Martin, there was a dialogue at the end of December in Kampala, and Professor Hisali was there together with some other colleagues from Makerere, and it discussed, among other things, the establishment of the Green Fund, or it called for an establishment of a Green Fund, which should serve or should address the challenge of the negative impacts on nature, the challenges of climate change. And we know that this movement, the movement of setting up various blended finance facilities that are coupled with technical assistance to the private sector is growing. You may know that the Uganda Development Bank last year, it was actually in April. I'm still thinking in terms of 2023. Last year, the Uganda Development Bank launched its green climate change facility, and it's I believe it's a 50 billion Uganda shillings facility. There are similar facilities in the region. For example, Rwanda recently launched a similar facility, and in that sense, the public sector, academia in particular, have a very big role for designing, advocating, and propagating the ideas in society that would make the society more aware, that would incentivize the society to the challenges, to the various challenges in terms of climate change and damage to nature assets that we are witnessing every day. So together we can do a lot, and we should do a lot. And it's also important, of course, that in these discussions, we involve the other actors. We involve the financial sector. The Bankers Association should be involved. I believe we are not doing enough to involve them in that process. The big financial institutions, the Standard Charters of this world and others should also be proactively involved in this, as well as the biggest private sector entities. What is Muktano doing about preservation of nature assets or replenishment of nature assets? What is their strategy? If we manage to change the situation in those big entities, then the others are more likely to follow the suit. So this is a big task, but I believe that together we can do it.
I love your enthusiasm and the energy. We can do it, absolutely. And looking through the chat, there are so many compliments for you, Prof, and for you, Marianne, for a job well done. Thank you so much. We are coming towards the end of the show, but I just have two more questions. There's one in the audience and one from myself. Mine goes to you, Prof. From the academia perspective, we've seen a number of universities setting up sustainability centers of excellence. In Australia, the University of Melbourne has one. The Makerere University has one, and a number of other international universities do set up these kinds of centers of excellence. In your own experience, what do you think is the role of these centers of excellence in promoting sustainability finance, and how urgent do you think a university like Makerere does need such a center?
Sorry, I was on mute. I believe that the role of such centers of excellence is probably fourfold. And by the way, at Makerere, we have two centers of excellence, not one. The other one is at MOOCs, by the way.
Yeah.
So the first role is support of policy research and development. Support to the government, to the public sector, at all levels, by the way, not only at the central level, but also at the local government level. I know that UNCDF, but also a number of other UN agencies such as UNDP, FAO, the Food and Agriculture Organization, have had very productive cooperation with Makerere University on a number of relevant issues, like the one of the latest examples is the work on the cabinet memo to deepen the capital markets in Uganda and to make them more open and more responsive to different types of finance, but also to different types of investors, including local governments, which is quite a topical issue. The second important area is research into the ways of mitigating and adapting to climate change, for example, but also how best to deal with nature assets in the local context. The third important areas is, I have mentioned it, advocacy, and there are quite a few very good examples when Makerere did advocacy on very important issues with society at large, but also specifically with the government, with the cabinet, with the president's office, and this is of course very valuable. And the fourth area is awareness raising and training. Again, the issue that I have mentioned before. I believe that there is willingness on the part of the private sector to engage in the relevant activities. After all, when we are talking about the public sector, these are not Martians. They're not coming from outside this planet. They're part and parcel of our society. They're also concerned about what is happening. But very often they either don't realize it or they don't realize how those problems can be addressed. And academia, in that sense, plays a very, very important role in sensitization, awareness raising, and also training of the private sector, but also the public sector. Talk to any local government officials. How much do they know about nature assets and nature-based finance? They don't even know about their own assets, let alone nature assets. So that's again a huge challenge. Thanks.
Thank you so much, Prof. So I will move on to the last question, and I will pose this to Marianne. The question is from Faisal Trinidad, and he asks, how can we ensure that technology-driven solutions are accessible and inclusive for all stakeholders in sustainable finance? Marianne?
Yeah, there I think we need to go back to what the professor said. We need the public sector, right? There we need the regulators, because what is currently happening in a number of markets when you look at sort of digital finance solutions is that it's more and more of a sort of winner takes all, because the more data you sit on, the greater your data stack is, the more you can innovate, etc. But very little of that is open. So just as we talked about open banking, that was a regulatory initiative to say, let's have open banking APIs, and the banks were very much against it. But I know in Kenya, for instance, they now are starting on open banking in a number of jurisdictions so that innovators can get access to the same data through digital APIs, so they can innovate and it can become much more inclusive and we can get much more innovation. The reason for the open banking regulation, which has been on in the European Union for quite a number of years now, was exactly because of the fact that the regulatory community, the policymaker community wanted more innovation. Because if you only ask the banks that sit on the transaction account data to innovate, they will not do as much innovation and not necessarily for green. So I think we need the regulators to, now we've taken the first step with open banking, I think we need to take the next step with open finance. So we need to open up also through APIs, of course, protecting any type of commercially sensitive information, but we also need to open up corporate banking finance. We also need to open up trade finance to a certain extent, so we can get more innovation in there. Because as we heard the professor say, we don't have the time. The planet is dying. It's going to be the silent spring, right? Where you don't hear the crickets, you don't hear the pollinators. So we really need much more innovative solutions than we have today. And I think the regulators here are key. And I think they're also key for structuring those markets or those underlying governance mechanisms that will make these type of nature assets investable and attractive. So the proper carbon markets with a proper carbon price in emerging markets, proper biodiversity credit markets with equity built into them, that will enable us to drive much more capital in a responsible way into nature assets. So I think here the key is the regulatory environment for sure.
I agree with you. I agree with you. And I really would love to continue this conversation for, I don't know for how long, but time is fast spent. So I would like to move into the closing session. And I'll ask Prof to give us your closing remarks. Where do you see this conversation going after the show? The same question to you, Marianne, in your closing remarks. First for the professor.
Well, as I said before, we have observed some positive changes and positive movements globally, but also in individual countries when it comes to financing nature-based solutions and green finance, generally speaking. The results of COP28 and the commitments to the loss and damage fund that we have heard, although not adequate at the moment, but they are coming. And this also potentially bodes well for the future of sustainable finance. When we are talking about the sustainability of finance, I see a question here in the comment section asking whether we will arrive at sustainable finance by 2030. Well, of course, forecasting is always very challenging, but I would say that we have to. We have to arrive at a situation where we have sustainable flows of finance for nature-based solutions and green finance. And I agree with Marianne that we need to unlock those sources of finance and those flows from the regulatory point of view. We need to make the regulation conducive to unlocking those flows. And this is, by the way, this is one of the issues that we have been discussing in the context of this cabinet memo that I mentioned on deepening capital markets. Unless we make capital markets for public corporates, for example, more attractive for investments, including through a tax regime that benefits those investors, we will not be able to radically change the situation. So you do need a well-thought regulation that would underlie and incentivize and encourage the investors. So I believe that we will move in that direction and that we will see sustainable finance by 2030, hopefully even before that.
Thank you. Thank you. You're very, very optimistic, and I love that. Marianne, over to you.
Yeah, thank you so much. And thank you for a wonderful conversation. I think we're moving more and more to a turning point where the financial industry is realizing that if you want to look to your biggest asset class, you no longer look to real estate, you look to nature. It's the world's largest asset class. It's 1.5 times greater than the global economy. And that is super attractive. And when we have the COP16 in Colombia, so for the Global Biodiversity Framework in October, where we will have the actual monitoring framework, then I think we will have something also much more concrete for the financial sector to measure against, to invest against. And we will have states, because they need to implement the Global Biodiversity Framework, they will need to do their ecosystem accounting for all states. So they will need to say, what are the natural assets that are in our jurisdictions? What are the ecosystem services? What are actually the value, monetary value they provide? And then those ecosystem services and natural assets becomes insurable, right? And they become investable. What we have seen in the Philippines, for instance, is that now mangroves is an insurable asset because they provide the ecosystem services of flood protection to the utility investment into the utility companies, for instance. And I think we're going to see more and more of this. so that the financial sector start to realize that, oops, the world's largest asset class is actually nature, the one that starts to engage with it, upskill, as we heard a professor talk about, to really have some of your internal portfolio management also be nature-based asset portfolio management, both in terms of nature-based carbon credits, biodiversity credits, but also actual regenerative companies, more sort of venture investment, but also assets in terms of forestry assets, these physical assets that are valuable in nature. So I think we are just at the beginning of this realization in the financial sector, and that you need technology because nature is too complex for a human brain to process this. We need help from AI to help us take that journey.
Wow. Thank you so much, both Marianne. Thank you, Prof. This has been an amazing conversation, and I do believe the audience agree with me that you've done a very fantastic job. Thank you so much. I want to close by being very simplistic, and this is what I mean. That all of us on this show, whether we are listening in or whether we contributing on the panel here, we do understand and appreciate the simplicity of nature. Really, nature is not complex. The only challenge is that as human beings, we've made it complex. And so because technology has come in and provided us with solutions that can actually help us to correct some of these mistakes we've made over time, it's given us an opportunity, and it has come out in the conversation that some of these big players in the sector ought to give back to the world which has made them, right? And so with all these options available for investors to put money in the market, for investors to put money in the sectors, for government to come in and lend a hand, for the academia to come in and also have an input, we should leverage on the availability of these technologies, the DLT, AI, and all these things which have really come in to simplify life and also make things easy to really make a contribution in restoring Mother Nature. And this is my final call to all of you. Let's do our bit to restore Mother Nature by using every available means, technology being one of them. Thank you so much. I've loved every bit of this conversation, and I look forward to hosting you once again, maybe in a physical one, and it will be more exciting. Thank you so much, Marianne. Thank you so much, Prof. You can say your goodbyes to the audience. Thank you.
Thank you so much, Martin, for your moderation. It's been a pleasure to attend it together with Marianne, and hope to see you again.
Likewise, it's been a true pleasure. Thank you so much for the excellent questions. I agree with, and thank you to the professor for all your wonderful reflections, and to Martin for really pushing us to think outside the box. It's been a wonderful conversation. I agree. I'm looking forward to taking it further in the future.
Thank you so much, and have a wonderful night.